Welcome to today's market update. I'm Maya Keynes, and joining me as always is financial expert Eli Sterling. Good to have you here, Eli.
Thanks for having me, Maya. We've got a packed session ahead, especially when it comes to Bitcoin and how technical indicators are shaping trader sentiment right now.
Absolutely. Let's jump straight in. One of the biggest headlines circulating today comes from Ivan on Tech, who's warning that 99% of traders could get wrecked by 2026. He claims most retail investors lack systems and discipline, leading to heavy losses despite short-term gains. How seriously should we take this kind of forecast?
It's definitely worth taking seriously, especially given what we're seeing technically. Right now, Bitcoin is sitting at around $112,000, which puts it up about 35% recently. That's great on paper, but without proper risk management or a defined exit strategy, those profits can vanish quickly. And if price drops below that key support at 104K, things could get very messy fast.
You mentioned key levels there. Let's talk technicals. Our latest report uses a daily Fibonacci retracement strategy on BTC USDT. Can you walk us through what these indicators are telling us?
Sure thing. Looking at momentum first, the RSI is currently at 49, just under the neutral 50 mark. It's been climbing steadily from an oversold low of 43.39, so we're seeing improved momentum, though not yet fully bullish.
And what does MACD show? Because historically, that's often been a strong trend confirmation tool.
Exactly. The MACD crossed above its signal line on September 6th. That was our first real buy signal. Since then, the histogram has gone from negative to positive and is accelerating. This tells us that bullish momentum is building rapidly, even though the lines themselves are still below zero.
Interesting. On the volatility side, Bollinger Bands suggests something else entirely, a squeeze. What does that mean for traders watching this setup?
The bands are contracting, meaning volatility has dropped significantly. Price action is contained within a tight range, hovering just above the middle band. This usually precedes a breakout, either to the upside or downside. Traders need to prepare for a sharp move once that squeeze releases.
So where does that leave us with the Fibonacci strategy verdict? Any clear entry or exit signals yet?
Not quite yet. While the setup looks promising, there's no official conclusion drawn in the analysis metadata. However, based on current readings, a cautious long position might make sense with a stop loss placed just below $104,000, that key psychological and technical support zone.
Let's shift gears briefly. Aside from crypto, any other major moves across metals or equities worth noting today?
Metals remain relatively quiet, but keep an eye on gold as central bank policies continue evolving. In stocks, all eyes are on Apple's upcoming iPhone 17 event. Tech sector performance could swing depending on product reveals and guidance.
All right, wrapping up, what should listeners be watching for tomorrow?
Keep your eyes on that $104,000 Bitcoin level. Watch for a breakout from the Bollinger squeeze, and monitor whether RSI crosses into bullish territory above 50. These will dictate near-term direction. Also, stay tuned for updates on potential U.S. Bitcoin reserve adoption. That could bring fresh institutional demand.
Great insight as always, Eli. Thanks for breaking it down so clearly. That's all for today's update. Thanks for tuning in.